Alrighty, welcome to a new episode of Silicon Frontier. I mark this one as special because we have the Micron earnings review. Massive day yesterday. I think for anyone who's been following this trade or involved in semis, I think we're all kind of holding our breath. It's for me, I had like a deep feeling that they would smash it, but of course, you never know until you know, and you never know what surprises there are. You never know if like bears are going to be like, oh, there's this like one random reason. They always have reasons, but like a major one which doubts the thesis. But the main takeaway is just the memory super cycle is well and truly here and here to stay. And if you don't believe it, I really don't even know what to tell you anymore. It's like, have fun doing whatever the fuck you like to do. That's genuinely it. Like, it's kind of insane for anyone to find like a reason to think memory's still cyclical. But hey, I'm not here complaining because that is where the alpha comes from, or my counterparty. So it is what it is. So I want to spend basically this entire call just really going through the Micron earnings because there is so much to unpack. I was tuned into the call, and it was a great call. And I think one thing I really appreciate about Micron's management is just how disciplined they are. Like the tact that Sanjay and then the CFO, for his name, had while being on that call was, I was like, okay, we're in safe hands here. It was very measured. It kind of level set expectations of the market in the right way. And yeah, I was like, great, this is a solid management team that I think is the right team to lead this multi-year transformative shift that we're experiencing in memory, but also in the broader AI market, generally speaking. So let's dig into the numbers. I've had so many Micron earnings posts that I've gone through. I think I've read almost every single one. So I might take a bit of time to kind of like actually find the actual thing, but let's see if we can actually open the slide deck because nothing is better than the source itself. These are the statements, but I want to find the actual deck that they had. Let me see if I can do a quick Google. Micron Q3 2026 earnings deck. Yeah, it might be on their presentation portal. I think earnings deck. Yeah, there we go. Cool, fantastic. All right, let's just go through this and then we can go through the commentary on Twitter and everything else. But I want to kind of start with the presentation. So just loading some things up on the side. Let's pull this one out. Cool. I have like a 52-inch ultra wide, so window management is half my job at times. Okay, so let's dig in. First of all, the beat was insane. I actually predicted it. Not to say I told you so, but Loki told you so. Actually, let's contrast that because I want to start with what my predictions were and then kind of work a little backwards from there because that's what drives a lot of it. So I kind of posted a few hours prior out to earnings. Where is our little post? Cool. Okay, so just to summarize like what my thoughts were before, because I think it's really important to understand like where your head was before, then you look at the actual data and then have like a review post. So one of the things, guidance was about $20. I wagered we'd get about 25, 26. It was 25. Beat's going to be massive, and reiterate demand is durable and here to stay. So this was one of the theses that I wanted to see while going into this call. There's the Anthropic partnership and new types of long-term agreements, touching on that, but we didn't really get too much of it. And yeah, understanding the demand for 2027, like that was kind of obvious, but really understanding like where does 2028 stand? Margins, what is margin discipline looking like? That was like another big one I wanted to see. The mix between DRAM and HBM production, price action. I mean, it's been like after hours was great. Right now it's a little mixed. Who cares? Long term is what we were really here for. and then the Silicon Control Thesis. If you haven't read it, I highly recommend it. It's on my profile. It's like written 8,000 words about why all of this stuff is here to stay, blah, blah, blah. Go check it out in your free time. But anyway, those are kind of like my thoughts going in. And then this is kind of what I got from the presentation, or I guess the earnings call. So number one was the, let's start here. So yeah, the annualized run rate of over $100 billion is crazy. These are really big and real numbers. Like, I think people who are like, oh, it's cyclical, so it's like, whatever it is, like, show me a business that makes an annualized run rate of 100 billion. There's less than, I think, 10 in the world. Like, these are absolutely, like, monstrous amounts of money. And they touch on NAND supply in addition to DRAM, which I think was really interesting. So calendar 2027 is booked out, and the 16 strategic customer agreements, SCAs, are basically locked in. Now, a lot of what happened during the earnings calls was you had a few analysts actually ask about what these SCAs entail and what the margins are. And they basically said the floor price is higher than the peak that they signed last time. So they're basically saying we're confident that the lower end of our margins are 60%. And I don't think it's even 60%. It's probably closer to 70, 80. They guided about 85%, I think, next quarter, but we'll get into that. A lot of this growth is data center driven, and like that's a key thing you want to understand. Like if it's consumer driven, like you're kind of fucked because that's what actually is cyclical. But I think this robotics and humanoid bit, they spent quite a bit of time on this. Now, some could argue it's a story, but I mean, are you really betting that robotics won't happen in the next 3 years? Like, even if management has the incentive to shill this as a narrative, I mean, like, I'm not betting that humanoids and robots are going to inhibit our world. Anyway, there's something to keep in mind. I like to try and maintain a balanced perspective when evaluating these things because, of course, management wants the best. But Micron's management feels relatively level-headed in my view. So customers are recognizing their supply shortage. There is supply to improve gradually in 2028. Now, I wouldn't interpret this as this demand evaporates at 2028 because the final question on the earnings call was like, where do you see supply? And he says, Sanjay, the CEO, said that we expect demand to be persistently strong through 2028. So even if there's new supply coming online, it's not like it's going to flood the market and demand's not going to be able to catch up. So I think that was very telling. In terms of industry trends, there was redirecting clean room space from NAND to DRAM. And so this kind of means that NAND supply growth is going to be limited. Now, I want to see what the SanDisk call is going to, I think that's in about 1.5 months, roughly. That's also going to be explosive. But yeah, that was that. SEAs, we've kind of covered on them. I don't want to like keep harping on about that. A bunch of around their technical roadmap. I won't really go into thing, but they've got HBM4 volume ramp is tracking twice as fast as HBM3E, and they've already shipped $1 billion in HBM4 revenue, and they expect to reach mature yields in HBM4 faster than HBM3E, which is very interesting. So I think Micron's really saying here that like we want to be in the race on HBM4, which is encouraging to see because that's kind of where the frontier is. There's also a bunch of DRAM stuff that will continue to get more expensive as HBM demand takes from this supply of DRAM effectively. Now, server units grow high teens % above prior expectations. And memory storage and hard drive displacement opportunities are expanding the addressable market of SSDs. I think this is a trend that I'm really looking out for. The expansion of SSDs is, in my view, actually still underpriced. I'm getting very bullish on SSDs because at this point, it looks like we just can't even scale with HBM. So anyway, that's that. Robots. They spent a good part of the presentation on this. So they said that effectively L2 and above, I don't know what these levels exactly are. Let me just Claude this real quick. Do I have, I haven't logged in. Okay, I got a new machine recently. I got a spec down MacBook Pro, which has already gone up $1,600 today in terms of the hardware, fun fact. But anyway, the mix of L2 and above vehicles, I'd imagine, let's say levels of autonomy, that's my best guess. I'm not like a big robotics nerd. But as it happens, it says humanoid robots carry 10 times the amount of memory as an average L2 plus vehicle, and this is going to be a sustained trend, which I fully believe. And I think, like, let's say the timing's off and it's not 3 years, it's 5 years we get robotics. But, like, there's still a ramp up that needs to happen. And, like, I'm betting a world in which we have humanoids. If you are betting on a world that we don't have robots and we don't have humanoids, and I mean, like, I don't really know what to tell you. And this was it. We now expect supply-demand conditions for both DRAM and NAND to remain tight beyond calendar year 2027. So, in my view, they're already speaking about 2028. They just don't want to, like, explicitly mention it because it's in negotiations. And this is what I mean. They've kind of done a good job of tempering expectations while giving good forward guidance. So DRAM supply to grow approximately in line with industry supply growth. NAND supply growth somewhat less than industry supply growth in calendar 2026. So it seems like Micron's really saying, hey, we're going to make bets on DRAM and NAND, and if that means DRAM and HBM, and if that takes our capacity away from NAND, we're happy with that. Which means there's even more of a focus on like something like SanDisk, I would say, and Kioxia. I really want to be looking out for what that happens. Cool. The other really interesting note here was the multi-year EUV supply agreement with ASML. ASML's biggest risk has always been customer concentration, namely TSMC being the dominant customer. But if we now have the memory companies booking more orders, I think ASML's mix of customers is going to shift quite a bit. And this is what I'm really, to me, the bull case around ASML starts to look more and more interesting as these memory companies become like just absolute behemoths. Cool. They've got a bunch of fabs coming online. I think first one mid-calendar 27 and late calendar 28. Who cares? It's still not enough. They have also got some facilities in Japan, Singapore, and Taiwan. So this is something I find interesting of like, sure, it's American, but they also have stuff outside of the US. To me, this year-on-year number is insane. Like, find me a company that is growing triple digits, that's a mega cap, and has ridiculous margins. Like, I mean, I'm waiting. I'm waiting to see that. Yeah, gross margin 83, operating 78. And for cloud, data center is just crazy. And mobile and client, this I'd imagine is DRAM most likely if you're looking at mobile. So great margins all around. Don't really know what to say beyond that. Basically, like, we made a ton of money. That's really it. It gross margin to 84.9%. And I think quarter four, I'm just like, revenue of 50 billion. And of course, this is the lower end because they always guide conservatively. So what it actually comes down to be seen. Now, the other thing around margins is that I think they said that they are trying to be disciplined. They didn't say we're going to milk everyone for like what it's worth. They did reinforce that they want to kind of play ball, but they're also going to take full advantage of the opportunity. I think people sometimes interpret it as like, oh, like, it's so weird to me because on one hand, the market says like, hey, it's bearish that they're signing long-term agreements. If you're so confident in your demand, why are you signing agreements? And on the other hand, the market says they're cyclical. Unless they're long-term agreements, like, this is just going to evaporate. So really feels like you can't win. And with the bears, because they'll argue either side. In my view, I think they've struck a good balance with their long-term agreements because there's like some prepayment, there's some floor, and then there's some spot. So they kind of like are trying to be fair to customers while still taking advantage of the market situation, which I think is the right thing to do. It's the most logical and I think keeps trust with customers, because at the end of the day, these are businesses, and like your goal is to collaborate and build with your customers, not view them in an adversarial way. At least that's what you'd hope from management of a high growth technology company. The other bit was expecting to earn 100% of excess cash to shareholders. This is, I think, most craziest bit. Like when you start having these memory companies do buybacks, um, it's going to be wild. So that was cool to say, because I was wondering, like, what did these memory companies do after they get all this cash and really saying we're going to buy back our own stock? Cool. Let's see. Revenue by technology. So NAND being 24%. There's no quarter four forecast. Sweet. Anyway, that's kind of like the main takeaways. Now let's jump over to Twitter and what the market's saying more broadly speaking, because you always find like interesting little nuggets. Yeah, so I mean, the market doesn't believe on the return on invested capital on AI spend, and they're wrong. I agree. It's like, I don't even know. It feels like with this earnings, people have become even more adamant in their incorrect views. It's like, well, we don't care about the data. We feel like this trade is overvalued. We feel like this isn't profitable, so therefore we're going to act like it's not profitable. Also, yeah, Apple raised prices again because they're getting squeezed by memory. If that's not a signal, I'm not sure what is. So, of course, now the upwards price revisions start to begin. Barclay, it's almost like everyone's kind of saying like 2000 is 16 or 1500 is now the floor, or 1400 is now the floor, which tells you a lot. 2000 is where like kind of everyone expects us to see. When we get there, who knows? But interesting to see how like the upwards estimates are just skyrocketing. Even if like let's say the price action bounces around a little, it doesn't really matter, in my view. These are blowout earnings. And yeah, Apple's like, hey, look, memory is getting more expensive. Please take on the cost. And this is going to be the first of it. I think we're going to eventually start seeing automotive makers saying the same thing, saying, hey, DDR4 prices are increasing, we got to raise prices. Like, memory price hikes are going to rip into every part of the economy, whether you like it or not, or whether you believe it or not. It's just a matter of time. So I think like AI is deflationary, but then memory is going to create inflationary forces. I don't really even know how you model the two out, but there's something there. Cool. Let's see. Macro data, don't really care about that right now. But yeah, if you look at this chart, it's literally a hockey stick. And I think there's so much skepticism around this earnings call. I can't even imagine what the next one's going to be like. It's the bears are only going to get louder. The skepticism's only going to grow more. So to me, like, I think you can't really borrow conviction. You have to have a fundamental view of how the future looks and then go accordingly. The amount of people that thought that Micron would miss earnings, it would tank, blah, 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 was so high. And here we are a day later, basically massive upwards price revisions across the board. I don't know where all my Micron stuff is. Maybe I'll just go straight to the ticker and see the top stuff based on the cash tag. But let's see. Yeah, if I'm right on this, memory does not sustain the pump post Micron earnings, and Q3 is going to be red, and we'll get discounts to buy everything. It's so funny. Memory top for a couple of months. It's like people like this I find hilarious. I actually retweeted this. It's like you have, and it, I find it especially funny. You have crypto influencers who shield absolute garbage saying shit like this. It's like, why should I believe anything you say? Like here you were pumping Fartcoin a year ago, and now you have an opinion on memory. It's like, whatever. Yeah, we're getting slammed a little. I don't know what's the price at right now. 50. Yeah, super aware. There's like no, it's it's not sustainable to spend. Anyway, who cares? Uh, so yeah, this is what I meant with like bears being like, oh, why are they capping their upside? And it's just like, look, you want some certainty. So this is what I mean with like the bear case. It will flip to whatever suits their narrative, but you just have to have conviction. Um, there's a lot of talk about CXL and memory pooling, but what people forget about this is like even if you pool memory, you still need memory. It doesn't change the fundamental need of having it. Um, now, uh, yeah, this was, I think, one of the more reasonable takes. It's like the world is now structurally short compute, and this is my thesis from the beginning. And memory isn't just a component, but a form of packaged intelligence. Yet, Micron still trades as if nothing changed. The bears insist the cycle is already over, and the stock continues to command a massive discount to the broader market, such as did in the pre-AI era. So this upturn is fundamentally different. Disciplined capacity, structurally higher HBM content, longer AI server replacement cycles, and this is, to me, just this oversupply and crushed returns. I would believe this if we weren't compute constrained, but we are. And the bear case just seems less and less plausible as time goes on. Um, Straight, it's like, what are you really arguing against now? Are you arguing that 2028 supply is going to fall off? Well, management's clearly saying that that's not the case. And as we go through more earnings calls, uh, I'd imagine every other, let's say, AI supply chain CEO is going to reiterate the same thing. So, not really sure what that's about. 2029, maybe, but like, we're speaking of 3 years into the future. And to think AI demand is going to be constant for the next 3 years is also a massive miscalculation. So, anyway, Shay, just speaking about the SEAs, but yeah, 100 billion of contracted revenue minimum pricing. And a lot of the language on the call they liked was that this is actually higher. They just don't want to set expectations wrong in the market because I think they realize like how jittery everyone was. Like even Bitcoin went up after the Micron earnings, which is like people are that terrified of AI capex, and I think for a lot of these CEOs, their language is very critical because the market's really holding on to every single word they say. A misstep, anything that's kind of out of line, could be potentially disastrous for the trade. So it's quite good to know that like we're in, I guess, good hands or responsible hands, level-headed hands. Yeah, and Paradise Labs typically like this account, and yeah, it's like humanoids need a lot more memories. Now, will Micron have enough capacity, and is there some kind of innovation in humanoids that drives less memory usage? I think these are good questions. I don't think anyone has enough capacity, and so far we've always sort of, if you're constrained on memory, you can't get your AI workloads. But what happens when you can't like get your robots because you don't have enough memory? That's, I think, a far more interesting question. And humanoids requiring less memory usage, just I don't really believe that. If you, well, it depends like how these robots work, but at the end of the day, when you're processing images or videos which are multiple frames of an image or anything like this and you need low latency, your context windows are exploding and your demands for latency are very high. So you need massive capacity and you need very good bandwidth, both of which are expensive. So there is the case of like, could Flash, and especially with SanDisk, like high bandwidth Flash, like bridge this gap? But the thing with Flash is it's not good at writes necessarily. It's good at reads, which I think will help in scaling a lot of like AI architecture. But if you don't have fast writes, it is a bottleneck, especially for certain inference workloads. So to me, it's like people are like, oh, what if we just innovate around memory? But I'm like, yeah, but how? Like you're running into a physics constraint at the end of the day. Like memory is fundamentally capacitors that store electrical charge. You can't algorithm your way out of storing like electrical charge in capacitors. If you do, like you're probably preaching alchemy that doesn't exist. Of course, great day for Apple to raise prices. Interesting that where There's a few good takes that like I found to be great. My favorite is RJC Capital. His shit posting is like top tier in my view. um, but yeah, multi-decade memory demand cycle, and it's this is begin this will begin before the decade is out. So it's like even if let's say we say that AI workloads are going to be very dominant and call it and let's say level out, the next wave of physical intelligence is going to just break all of our capacity. Um, I mean, people that keep saying like we're going to be able to use less memory, and even if we get more algorithmic improvements as we have been seeing with open source models, we then see demand go up because like I've seen this myself where as the models get cheaper, I'm like, oh, I can now orchestrate more workloads with cheaper agents and my usage goes up more. So we're in this really bizarre paradigm where the cheaper that we get these outputs, the more of them that we use. And I've experienced this firsthand. So I'm a full believer in this whole thesis. And yeah, let me see. Yeah, Kioxia announced their U.S. Depository shares are in April, May 2027. That's still far away. I think the next big catalyst is going to be Hynix with their ADR listing on July 10th. Going to be cool to see how that plays out. Upwards revisions. This is some of my memes. I feel like a lot of just Twitter yesterday, as soon as like the earnings came out, I was just like having fun looking at the memes. Let's just go to RJC Capital because I do think he has some epic posts. Where was it? He does have some good things. I think, this is something I want to mention. So, yesterday, OpenAI announced their chip Jalapeno with Broadcom. I can't remember who did something similar. Maybe it's Anthropic. But I think it's like while ASICs may dominate, GPUs will come and go. All of them require memory, and as these memory manufacturers start basically enforcing vendor lock-in either at the model level or at the GPU level, it makes them less and less like a commodity. And we're starting to see that change already start to happen, but I think it's going to really accelerate the next year or two as everyone starts having their own like custom silicon stacks. So anyway, I think that's a lot of what I wanted to cover with the Micron earnings and where things are going. Price action is always hard to predict with these things, but directionally speaking, nothing changed in the thesis. In fact, in my view, it only got stronger. And it's going to be an interesting few weeks and months. So congratulations to everyone who believed and got rewarded. And either catch everyone tomorrow or next week. But yeah, it's what a crazy earnings call. It was definitely fantastic. Anyway, thanks for tuning in, and I'll catch you all whenever the next episode is. Peace. Bye.